Hello everyone. It is time for a monthly market update on our residential markets and Happy New Year for everybody. It's 2023. I'm excited to see what the new year is going to bring in real estate, my personal life, everything else. And excited to bring to you some update on the market. We're going to talk about what happened in 2022, a lot of good fun facts, and then also kind of what was going on in December. So I have a lot to talk about and go over, and then also want to talk about what we expect to see here in 2023. So saddle up and get ready because there's a lot of data fixing to come at you. So in just little fun facts, multi-million dollar homes were the really only thing that was up on sales for the year in a significant way, and that was multi-million dollar homes were up 23. Sales were up 23% for DFW. And can anybody guess why they were up and most everything else was flat to down for sales for the year? The answer is we have a lot more million-dollar homes than we used to. We don't. The price appreciation year over year growing at 30% for a while there has just changed our million-dollar market, and even to the point where we have to redefine what a luxury home is, because typically it used to be $750,000. It's got to be $1 million plus to really quote unquote be a luxury home with luxury finishes, etc. So just a fun fact. Dallas-Fort Worth home prices were down 10% from June's peak in 2022 to December. So from 2022 to June of 2022 to December of 2022, prices fell 10%. That's the average sales price for the whole DFW market. But that's not what we're seeing. They fell, well, I won't say. The price appreciation slowed much more than 10%, because if you look at it on a year-over-year basis, single-family homes were only up 6% in the whole North Texas D-FW Metroplex area, whereas a year ago they were 30%, almost close to price appreciation numbers. So, but one of the big things is it's 6% is what the whole Metroplex showed as price appreciation. And so I've been talking here for month after month as we've seen this rising interest rate environment that we are going to need to get into the single digits before we really begin to see the market move again, transactions move again. And we're there, and lo and behold, we came into the first part of the year, and we've seen a lot of pickup in transactions. Now, it's starting to slow down again. I think it's going to come in waves, just simply because there's just not enough inventory still. But just fun fact, prices appreciated at 6% in December from December previous year in the whole Metroplex. I'm going to narrow it down to county by county here in a minute. Listen to this, DFW condo sales for last year fell 48%. That's just a crazy drop in activity. And what else we have here? Townhomes fell 17%. The median price for a condo was up 9%. And then median price for townhomes was up 6%. So we're just seeing a lot of what's happening here is the prices are beginning to fall, and have they fallen enough is the big question mark. I don't think they have quite fallen up. They're getting closer. If we could get more inventory, I could say be more confident about how much they've fallen and if they need to fall anymore. But what has happened in our market, while we saw basically a pause in transactions, in essence, when you lose 50% of your market, that's a huge drop. In some cases it was 50%, but for sure 30 to 50%. It's just enormous drop. And so what has happened is the buyer just fell out of the market. They got priced out of the market, but they just couldn't afford it any longer with interest rates going from 3 to 7%. And so, but what we're beginning to see is the prices are beginning to come down. And I'm going to show you guys a metric of what we're getting now on list price here in a minute that should be eye-opening for you buyers out there and what you're looking to do and what makes sense, what doesn't make sense. So, so buyers are priced out of the market, but what they are not is out of the market, 100%. They're priced out of the market. So what we are seeing is when you, Mr. Seller, you're preparing to sell, price your home at the correct market price. What we're seeing in the decelerating appreciation in the single digits, we're seeing buyers put offers on it and put it under contract. Demand is still there. People are still flocking to the D-FW Metroplex. We have the hottest zip codes in America here. U-Haul, the most people are moving to Texas, or the bookings are most U-Hauls moving to Texas than any other state. The demand is here. We just have to get affordability in check, and that's what the Federal Reserve is supposed to do, and it's working. And we're beginning to see prices come down. We still need them to come down a little bit more, and before we really start getting back to more normal activity, I believe. But for interest rates for this year, we expect them to kind of stabilize at around where we're at. Right now, we're at about 6.46 is the national average on the 30-year mortgage. We expect that to just kind of go up and down. It got as high as about 7.5%. So it has moderated as inflation is beginning to come down. The markets start pricing in, well, we're not going to have more price or more aggressive Fed policy on interest rate hikes. But we expect it to, the consensus is interest rates aren't going lower this year. They're probably going to be just more of the same, bouncing between 6 and 7%. And, you know, so that's kind of what we can look forward to in 2023. The biggest culprit in the room, the biggest bear in the room is inventory. And we're beginning to see sellers start to come to the market with inventory listings pick up. We've seen that just coming into this new year, but we have another force where we have building just falling through the roof as far as new construction permits, et cetera. The Dallas-Fort Worth had a 38% decline in new home construction. That's the biggest decline since 2009 as far as percentage-wise. And so we still got an inventory problem. We still have a strong seller's market because now we're building less homes because builders are pulling back. They have to pull back to get construction costs down, labor costs down, to be able to go back into the market again strong and compete at lower prices. So it's just a big shift happening here in our market. I feel like longevity, it's good. We were just out of control with 30% pricing. I'm, as a real estate broker, am excited to see prices come down and transactions start happening, not just for me, but buyers are trying to come into this market. Buyers, nothing was really able to transact. We're not only seeing sales prices come down, but we're also seeing rents come down. And it's the same story. If you own a property and you're managing it, we manage a lot of rentals, and what we're seeing is if when we lower that price down just a little bit, the market is coming to us. I mean, it leases up really quick. It's just a matter of affordability, and until the prices adjust, buyers and renters aren't going to really come back into the market strong. But they are there. That's the good news for DFW is our market is growing, and it's going to continue to grow. Business after business still coming here. That has not stopped. Like, again, U-Haul rentals are bound for Texas. And so people are coming here, and that pendulum is not going to shift. So I want to show you guys something, an image here that is fun, just to kind of show you the price appreciation is the big thing. You know, if you look here, these are all the counties. December home sales across North Texas. So this is a bigger picture of what's going on all the way across North Texas. But as you can see, what I want you to key in on is the price year over year percentage increase or decrease. So you can see Collins up 6, Dallas is up 1%, 8%, 11% in Ellis, and 3% in Coppin, -1 in Rockwall. So you actually see some price correction in Rockwall there. That's what that's showing. And then when I get into the MLS here in a minute, you're going to see even more dramatic numbers. But 7% in Tarrant. So we're in the single digits now on price appreciation. So it's not a surprise. Now we're seeing a movement in the market. We're actually starting to see people sell and move. And the biggest reason why we're seeing more activity is this. That's it. There is no other answer for it. It always comes down to price. When things are priced right, no matter what market you're in, it will move. Now, you may not like that price. That's the problem as a seller, is getting used to the price. We have what we call a buyer's fatigue. Buyer's fatigue, we talk about it all the time. They just get tired of paying the high prices. Well, we're in seller fatigue mode, and sellers now are fatigued. And they're like, okay, it's time to sell. I'm done. It's obvious the market ain't here, and they're fatigued, and they're ready to make a move. So that's what we're seeing in the residential markets. Let's key in more on a just local level on our counties I typically go over here. So Rockwall County on average sales price was down 4.4% according to MLS in Netris. And so that's what real estate agents report too. Cobbman County's up 3.7%. Hunt County up 1.6%, and Dallas County down 1%. So we're seeing correction to flattening out of price appreciation from December of last year. It's going to be interesting to see how much of a correction, if we have any. You know, the consensus is it's not going to be strong, and I believe that because even just seeing this much of a price adjustment, we're seeing activity immediately, and then it draws down our inventory, and that's the problem we have. And so let's go to days on market. If you're listed on the market right now, you're probably frustrated because days on market are up 60, 100, and 75 and 46%. Now, you know, that's still anemic. I mean, it's still not a long time on the market from a market perspective. We're getting back to normal if you look here and then you look pre-COVID. So these are more normal levels that we're trying to get to. We're still not there on days on market. So let's go to month supply. I don't know that we'll ever get there with the demand that we have coming here, but we need more supply. This is the big culprit right here. So we're trying to get to pre-COVID levels here, which is real interesting. Some areas, what we see here in Hunt County, which Hunt County is kind of an anomaly and not as many transactions there. But if you look at Kaufman County, you're beginning to get back to pre-COVID levels on month supply, but 3 months is still, and then 1.8 months supply in Dallas is still a strong seller's market. It's a 4 to 6 month for a balanced market, and we just don't seem to get there because every time we do get the price adjustments, boom, the inventory's gone. It goes under contract. I mean, it literally happens that fast. That demand is not left us. They're just priced out of the market. Homes for sale. This is the amount of homes for sale. It looks good, great, up 150, 106, but I've got this chart here, this 3-year chart, and let's go 5 years, just kind of begins to give you what normal amount of homes for sale. We're trying to get there, but we got a whole nother bump to get up before we're really going to get to a more normal inventory levels, as you can see, pre-COVID. So good, we're getting more inventory, but just not enough. So that's why if you're looking to buy a home like I am, you're still frustrated because you just don't see enough inventory. But you do have more inventory. That's the good news, and prices are coming down. New listings, another frustration. This is the big culprit right here. is we're seeing a drop in listings. Now, I will say that's for December. We saw it in December. It just came to a halt. Everything did. But we're beginning to see in January new listings come to the market, so keep an eye out for that. Be interesting to see what happens over the next 60 days here. But new listings, we need more new listings, and that's one of the problems here. Still will always be. This is a big eye opener. Pending sales into January of 2023 are down 40%, 35%, only 5% in Hunt County. Again, they're building a lot in Hunt County. It's kind of skewed to look at those numbers. And then 32 in Dallas County. So they didn't have a whole lot of inventory. Let me correct myself on Hunt County. They're building a lot. They're building a lot everywhere, right? But there was not a lot of inventory there to begin with, and so it doesn't look the same as like Rockwall, Kaufman, and Dallas County. But bottom line is those are huge drops in transactions still leading into January. And then closed sales, closes December was down 30% in Rockwall, 27% in Kaufman. Hunt County down 17%. Again, same thing there. They have more inventory than they ever have. Dallas County down 40% nearly. So those are just crazy drops in numbers that we've seen, and we saw that freeze in December. It was something. I think we're going to see a little bump here coming into the new year. It's still going to be down. It's still going to be down, but I definitely believe we're going to see a bump into the new year, and I'm hopeful that we're going to see more inventory come in, and that's basically off of seeing. We do a lot of business here at M&D, and we're just beginning to see things start to move. Sellers bringing their house to the market, pricing it right, ready to make a move, and they know they're going to get their house lower. One of the things I wanted to show you as a buyer, but when I'll close with this, is percent to original price. So when we were in our market of just craziness last year, we were getting in Rockwall County, as you can see here, 104% almost over ask. And as a buyer, you say, okay, I don't want to pay a 7% interest rate or 6% interest rate. Well, the difference now, though, Mr. Buyer, is when you look at what our numbers are now, we're now down in Rockwall County to 92%. So you're 10% of less or more in all of these counties. So my point being is if you measure apples to apples, Mr. Buyer, which we have plenty of buyers, probably more than we have of sellers, but just to understand and make sense of it, well, yeah, I might be paying a higher interest rate, but my price is significantly lower to what I was paying before to offset where it's maybe even or maybe even less with what we're seeing in the market. So what we're telling all of our buyers, because this chart right here shows it, make offers. Just make offers. Sellers are ready for offers. Again, we call it seller fatigue, just like we have buyer fatigue. And sellers love buyer fatigue, and buyers love seller fatigue. That's just the way it works. We're in a seller fatigue mode, and so buyers make offers. Get it out there, even lower. You can see here, nothing's selling hardly for list anyway. Get out there and make those offers and see what traction you can get. So that's my market update. I think we're going to have a better transactional market this next year. Maybe a little bit of a correction in prices. It won't be much, probably more of just steady, more normalized price appreciation and getting back to more normal activity as everybody gets used to this new from the drastic change we had a year ago. And so if you need any help, I would love to help you. Our firm, we do residential, commercial, and property management. We have nothing but 5 stars. Would love the opportunity to serve you. Have a great day. Reach out if you need anything. Look forward to hearing from you.